Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, November 22nd at about 11 a.m. Eastern. Before we start, please know that all of us at ToniTurner.com wish you and yours a very, very enjoyable Thanksgiving. And now let's turn to the market. The Dow and S&P 500 are higher so far today as President Donald Trump said a trade deal with China was potentially very close, adding to optimism triggered by comments from Beijing that it also wanted to reach an initial agreement. And on that note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $310.40. That's about 3104 on the S&P 500 itself. Now, we're down after making a small retracement this week from the this past Monday's all-time closing high on the SPY at $312.02. That's about 3120 on the S&P 500 itself. Now, as you can see, it's still above its 20, of course it would be, wouldn't it, near all-time highs. It's above its 20-day moving average, which is coming here at $308.09. So we have support here. Should the SPY need to come a little lower here, any profit taking needed, it could come down here. We've got plenty of support at 308. Then, of course, we have more support coming in here at these highs down here at about 302, down at the 50-day moving average at 301. So as we know, the SPY broke out of this wedge that it had formed earlier this summer and is now up at these all-time highs. It's very encouraging. We are cruising into the end of Q3 earnings season, and of course we are into the period what seasonality declares are the three most profitable months of the year: November, December, and January. So can the SPY move up in the coming week and move up over those highs? Most certainly it can if we have enough buyers. If it can't, again, we have price support down here at about 308, more down here at 302, 301, and certainly as we come lower down to the channel line at about 292, the 200-day moving average, and so forth. So the SPY in a nice uptrend here. We can remain cautiously optimistic, but I'm still making sure that my protective stops are very firm on all of my positions. The next chart we're going to look here today is the Invesco QQQ ETF. Now the QQQ represents the Nasdaq 100, very important index in the market. Its components include the top large cap tech stocks and the top non-financial stocks in the Nasdaq stock market. That's by market capitalization. Now today when I captured this chart, the QQQ was trading at $201.14, just above its 20-day moving average. Like the SPY, it's pulled back this week from an all-time high it made on Monday, all-time closing high at $203.13. Now price support here sits right here at 200 should it be needed, then down at 198, and then one at 194 over the tops of these highs here. So that's pretty decent price support. And at the moment, that runs right into the 50-day moving average coming in at 194. So like the SPY, plenty of price support here and indicator support should it need it. The QQQ need it going into the coming week. It'd be great if it could sail into blue sky in the coming weeks, again, but if not, plenty of price support down here. Still in all, as I said with the SPY, I am keeping very firm protective stops on all of my positions. We've made some good profits recently, and we certainly don't want to give them back. Okay, the third chart we're going to look at today is one we haven't looked at in a while. This is the SPDR S&P Metals and Mining ETF, the XME. The XME includes stocks from aluminum, coal, and consumable fuels, copper, gold, precious metals and minerals, silver, and steel. Some of the top components include Core Mining, Hecla Mining, Reliance Steel and Aluminum, and commercial metals companies. Now, you're not going to see what I'm going to say in the next couple of minutes on a chart, but I'm just kind of telling you where the XME has been, and you can look at a long-term chart of your own if you want. The XME touched an all-time high in June of 2008 at $96. Since then, it has fallen, rallied, made a new all-time low at 12, of all things, in January 2016. Can you imagine 96 to 12? Since then, it has picked up steam. Again, you can't see this on your charts, but it rallied to 38 in June of 2018, dipped and then made a lower high this February, and we can see this on this chart right up here at 32. Now, as you can see, the XME has come down, and most recently it formed a bottom here down in May of just about 24.50, and it's held those lows. So now, as we can see here, the XME is forming a triangle or a falling wedge. And falling wedges, many times, if the asset is strong enough and buyers come in, can break to the upside and potentially start a new trend higher, with the operative word being potentially. So in the coming days or weeks, we see the XME down here at $27.18. It has made its way back up after touching these lows 3 times here at about between 24 and 25. It's come down, but it's held these lows here. That's pretty good, right around 25. And we've drawn a channel line that's come down, and the XME so far has broken above it. It's trading in a consolidation here between the 200-day, the black line, moving average coming in right now at $27.63, and it's above the 50-day moving average, which is coming in at $26.45. Now, the XME again is over its channel line that came down from above so far, at any rate, so far at 27.18. If the XME can rise in the coming weeks above the 200-day moving average up here, again, which is coming in at 27.63, if it can move up above that resistance point, and if the market remains relatively positive, I may add shares of the XME to my trading portfolio. And that's, again, if it moves above and closes above the 200-day moving average, coming in at $27.63. So I may add some shares here if that takes place. If it comes up and moves above 28 then and continues to climb, I may add more shares to my portfolio. I will place my initial protective stop as a close below the 50-day moving average for now, and that 50-day is coming in at $26.46. Then when and if the XME rises from this 28 arena, of course, I will move my stop to a trailing stop. So if the market continues to be strong in the coming week, you may want to keep an eye on the XME. And now for upcoming economic reports, but first, please join us this coming Monday for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now, let us help you. During our session, we talk about which side of the market to trade. I give you a mini trading lesson, and I also give you 6 stocks and ETFs that may become ripe for high potential trades. Can't attend the live session? Not a problem. The recording is available to all of our members just a few minutes after the session ends. Tony's Market Club is a low-priced, high-value opportunity to learn more about the market, trade more successfully, and make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now for the upcoming week's economic reports, and remember, we're still in earnings season, although it's tapering off. On Monday, not much going on economics-wise. Tuesday, S&P Case-Shiller Home Price Index, consumer confidence, and new home sales. On Wednesday, we have durable orders, the GDP, pending home sales, crude inventories, and the Fed's beige book in the afternoon. Thursday, we get our usual jobless claims and natural gas inventories. And on Friday, we'll get the Chicago PMI, which means Purchasing Managers Index. Again, join us at Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, happy Thanksgiving. Keep green on your screen. I'm Toni Turner, and this is The Market Now.